Welcome back, everyone. Today is June 20th, 2020. I'm Jerry Hall, and here's the view from Costa Rica. Now, today's video will not be for those that need to know when moon, but rather those who want to understand how moon. That's right. I'm going to show you how to minimize risk in your investment and maximize long-term profitability in this digital asset space. Let me take you to this Cointelegraph article where it states the XRP Army's cost basis per coin is $1.38. That's right, 7 times the current price. Well, if you've been in this space for a while, at least for me, starting in February of 2018, when XRP was $1.08 per coin, yeah, I'll tell you that my cost basis, which is the average cost per coin, is higher than the current market price. There's no doubt about that. Let me take you to the goods, though. Let's get right into it. So here are some winning strategies. First, in order to understand these strategies, you'll first have to understand several basic tenets of investing and trading so that you design your individual approach based on fundamentals of sound math and tax liability so that you can forecast your true return on investment. All of this can be done on the back of an envelope, but I strongly suggest you keep detailed records because they are best. Number one, cost basis. This refers to the average cost per unit. You need to know with accuracy the amount of money allocated and the number of units acquired. Here's a formula. Total amount of dollars invested divided by the total number of units acquired. We want a cost per coin. Tax liability. It will be absolutely imperative that you know exactly how to calculate the liability and the amount of tax you will owe when you realize gains from your investment. Every country is different, and even in the United States that has one federal tax code, each state has differences that can and will affect your net. It's very important to keep track of your dollars, your euros, your pesos, what have you, that you've put into this market. If you don't and are only able to approximate, don't go crying when the tax man, who will know exactly what you got in there, comes calling for his pound of flesh. Strategy number one, capital appreciation. Capital appreciation refers to the increase in value of an asset determined by market price and the cost basis of the investor. This is a direct result of the supply and demand model of open market trading, where participants buy or sell either using set prices, which are referred to as limit orders, or the going rate, which is referred to as a market order, to establish a sale or a purchase. Many in this space will have a tremendous opportunity to profit from growth of the digital asset revolution. The following strategy outlines, by using the information of what you have and what has happened as a means in which to minimize exposure to the growing pains of a fledgling market. I'm going to use Bob as an example here. Bob has invested enough of his capital to hurt his future solvency if his investment were to go to zero. Bob is what we would call a high-risk investor. Bob invested $1,560 and acquired 3,211 XRP over the course of the last 13 months. The math works out to an average cost of 48 cents, so 48.5 cents per XRP. Now, Bob has a plan to sell 75% of that 3,200 XRP, which equals 2,408.25, at a price of 64 cents. This would bring a return of $1,541. He's under the $1,560 he invested, so there is no tax issue to worry about here. He has a total of $18.88 of his own money still invested. The balance of 802.75 XRP is left in the investment to mature over time and represents no downside capital risk. I call this free rolling. More on this later. I refer you to this chart not because I'm a firm believer that technical analysis is accurate forecasting future events in the market. Looking at a chart like this, I can, with 100% certainty, see past performance. Now, in the case of XRP, looking at a chart like this that dates from approximately August of 2013 to the end of May 2020, I can clearly see that there were 6 very strong aggressive moves to the upside, with 5 of them being very pronounced parabolic moves. Now, as an investor, parabolic moves to the upside are attractive, but I need to understand that in this market, that these moves to the upside are short-lived. They have a very, very short duration with extremely long corrective periods in between. So if I need to recuperate my capital that I invested, I need to be prepared. Using this model from Bob, using your own holdings, and see what this could mean for you. Keep in mind that it could take 2 to 3 years before adoption is at a critical mass level. It's a very, very important factor to keep in mind. Forecasting the future is very difficult. Strategy number 2, I call this passive accumulation. It's akin to any passive income strategy that you may receive, whether it's through fixed income bonds, dividend paying equities, real estate holdings, etc. Passive accumulation is the process in which an investor pledges his or her assets to an outside entity with the understanding that a percentage of return will follow. An example from the equity markets is an investor purchases 1 share of Apple stock for $349.72. That was Friday's closing price. Apple pays a dividend of $3.28 per year in 4 quarterly disbursements of 82 cents each. As you can see, you can go to any one of these reporting sites and see what stocks are doing. I think it's good for you to understand what the legacy markets are providing in the form of returns for your investment dollars that you put into them, and contrast that to what's happening in the digital asset space. Although the actual asset price, which is the value of that underlying Apple stock, may fluctuate on a day-to-day basis, unless the board of directors of Apple vote to change the dividend of $3.28 a year, they will continue to pay each shareholder for each share owned that amount of money. Now, examples from the DeFi space. An investor buys, let's say, 1,000 XRP and parks it at Nexo, who will then pay that holder 4% a year to use the XRP in their business. Now, it appears that the percentage is paid in dollar value terms. And so to understand the return on investment is subject to change in that valuation of the underlying asset. So as XRP goes up or goes down, will determine the dollar value that 4% represents. Not an easy thing to forecast. But there are companies out there doing it. You got Nexo saying come earn with your crypto. You've got Celsius saying, hey, you can earn, you can borrow, you can do anything. You've got cred saying, hey, hold your stuff with us and let us pay you a return on your investment. All of these things are fine and dandy, folks. Remember, do your own research. Anytime you take your coins and put them somewhere else, you are in a much higher risk situation than if they are contained in your own secure wallet. Just remember that. It's very, very important. Risk must be assigned as the coins are no longer in your control. Let's take a look at one of these proof of stake protocols. So here's an example using a proof of stake protocol. It's Tezos. Staking Tezos, which is the XTZ token, an investor purchases 1,000 XTZ and pledges the coins to a staking pool. Here is a staking rewards calculator by Tezos showing those exact numbers. You can see here you got 1,000 XTZ. They're saying at today's market rate it's worth $2,580, and your monthly reward for pledging your coins would be $11.88 based on today's current price. But what's important to understand here is that it's going to be a fixed number of the underlying assets that's returned to you. So regardless of the price of Tezos, you're going to get 4.6043 XTZ every month, which is a yearly accumulation of 55.2514 Tezos. Now, this is 1 year. You can even get crazy and start compounding the value. And that's where it gets really exciting. Because if you have a compounding of the underlying asset and a capital appreciation of the underlying asset, that is the formula for Moon City Baby. That's right. I'm talking Jungle Inc. style popping Bentleys and rolling in a brand new Bentley. Which leads me to this. Strategy number 3, free rolling for the win. That's right, winning. I will be testing this thesis out using Cardano ADA. I have a bag of ADA, which I will stake to a staking pool where I will receive rewards for pledging my coins. My cost basis, right? I invested $3,150. I have 67,961 Cardano for an average cost of 0.0463, blah, blah, blah. Let me take you to the staking calculator because this is incredible. This is the Shelley incentivized testnet staking rewards calculator. Now I've already entered the amount of Cardano I have, and you can see down here underneath under the ADA, the daily, the monthly, and yearly rewards I'm going to receive. Now there's a subsequent dollar amount associated directly to the right. Now keep in mind that this is based off of today's pricing, right? But still, if I know I'm going to receive 6,969 ADA every year, which is just this, it's sitting in my Daedalus wallet, I'm staking it. It's a set it and forget it type of thing. And I'm going to be knocking down 6,969 plus ADA per year. I can start to build a profit model from this. So I'll take you down. Here's the thesis. If the price of ADA should appreciate to 0.452000172 over the course of the next year, then the 6,969 Cardano I'm going to receive for that year will equal my initial investment, and I will sell the 6,969 ADA. I will cover my out-of-pocket investment with no tax liability, and I will be on a free roll. That's right, the balance and withdraw according to my larger, let me rephrase that. I will withdraw any staking rewards or underlying pledged coins according to my larger investment strategy. Capital gains and such will then start to apply. Keep that in mind. It's very, very important. Another point to keep in mind is that the market determines the value of the asset, either higher or lower relative to my cost basis. This is why it's so absolutely imperative to understand what your cost basis is so that you can design investment strategies to capitalize and take advantage of whatever situation or whatever goals that you have. Once I understand this, then I have a foundation to determine the capital appreciation that I'm going to profit from. Folks, I hope that this has been helpful for you. As always, I encourage your engagement in the comments section. I encourage you taking this video and retweeting it, posting it on Facebook, telling your friends and family. You can reach me on Facebook or Twitter. My DMs are open, private messages are open if you want to discuss your own personal strategies and how you can benefit from some of this basically sound math. This exciting world, folks. Exciting things are happening. And regardless of the length of the bear market, there are ways for us to profit. Let's continue to support each other as we move forward and educate ourselves so that tomorrow will be better than today. That's the view from Costa Rica. And until next time, Pura Vida.